things off. So first and foremost today, getting your charts up on any given day is actually very critical, but more so on a day where there's actually a lot of key technical releases coming out. Okay, we've got the RBA today. The Aussie dollar itself is in the spotlight. The retail sales first up at 11:30 a.m. Australian Eastern Standard Time, and then followed 3 hours later by the RBA cash rate. So what the key components is, I'll just give you a bit of background on those two. Retail sales is a very aggressive number. It's a key number that the RBA looks at. It's quite strange that the last couple, they've been putting the retail sales data out the same day as the actual cash rate. It's a little bit of a conundrum because the RBA cash rate itself and the statement they release is like the main event. And sometimes it can supersede the actual impact that the retail sales will have. At the same time, if there's some significant variance in the retail sales data, then basically what a lot of punters think is that the RBA have actually seen this data first thing this morning. So we've got the retail sales here. If there's any major significance in this 0.4, if it's much stronger or much weaker than expected, then that's sort of half an insight into what the RBA is going to do in the afternoon. I don't think it actually happens like that. Apparently the RBA do get locked in a room. They don't have access to a lot of various information. They just assess on what has happened. They're not sort of up to speed on what is currently happening. So that's always something to sort of think about. But those data releases make the trading opportunity very high and very good. Now what we have to do is actually really focus on our charts and tidy up any sort of loose areas here with regards to where is support and resistance. So when we are going through this, it's, as you know, the guys who have already come through the workshop, it's a matter of trying to find the easiest levels that you can. We've got the Aussie dollar here. Now we've got a sort of general trend line here that was sort of in play last week. Well, it was actually in play up until the Friday close. Now it's actually not even really in the game. Let me just delete this. So then we've got this line here. The open on Monday, this is one of those classic opportunities or situations where the Chinese released some significant data over the weekend, and this is one of the major reasons why we don't run positions over the weekend. It sort of gapped 50 points here on the open, gave the currency enough sort of drive just to sort of tweak through here. We had the building approvals data out, which was much better than expected. I thought it was slightly offset with the company profits, but as the day wore on, they were pretty happy to take the Aussie dollar higher. So not necessarily an awesome trading opportunity. Nothing I was getting too excited about. You see that move yesterday up to sort of 90, sort of 20, back down to 89, sort of 50 here last night, and this morning, just ahead of these retail sales figures, we've got the currency kicking in again. So that's, these last three lines don't really mean too much. I'm sort of showing you the movement. But what we want to do is really quantify these technical lines. This line here now, because this bottom line down the bottom is the real support line, this line, which was resistance previously, now acts as support, but it's actually below the new support line itself. So the smart thing to do, or the correct thing to do, is actually just delete that line. Okay. So what I want to do is just go back. You want to go back and get the bigger perspective of what's actually happening here with these currencies. So with the trend lines themselves, let me just get rid of that. As you can see here, this is I wouldn't necessarily call it a glitch, but you've got a situation where the ideal level comes from the very high. All right, so if we go from that high, then the next highest level is this one right next to it. That's actually the correct resistance level on the top side. Now, the benefit of actually going back and actually drawing these lines on your daily charts, and this is a daily chart with a 1 year view in it, you have the actual scope to actually draw these lines more accurately. As you can see, that was originally off the key point at the top. So then just bringing this into more the sort of scope of where we are right now, and you can actually sort of see there's no sort of confusion here with what these levels are. Now, if I even come back in a little bit tighter, now change it back to the hourlies, it gives us an even better perspective, and you can trim that even closer to, you're basically zooming in. So make it easier for yourself. If you're zoomed out, as we were, there's a high margin of error. If you're out by a couple of like a millimetre, it could be 10 or 15 points either side. So the secret to this sort of idea of things is to bring it basically back into a zoomed level so you can actually really assess what these levels are. Then on the Aussie itself, you're just trying to work out what the key levels here on the Aussie are. We've got 91 sort of 10 on the top side and on the downside, so you get the vertical axis exactly where the Aussie is right now and the horizontal on the lines. So 88.90 and 91.10 are our sort of key levels. Now, if you have a look at the basically the more of the forum this morning, you would have seen actually the area that we're actually sort of putting a lot of this data up. That's a sort of good resource for anyone who's sort of just trying to keep an eye on this. The mobile app will actually include all the forum updates, hopefully in the next few days. That way you can sort of keep an eye on this, is keeping in touch with the market, so you can actually keep checking with your key levels what actually is going on. So if I just actually bring this into the scope, is the article this morning, Aussie takes centre stage, and you can see the actual chart. It's exactly what we had this morning. You just zoom this picture in so you can actually see. There it is as well. So this is the systematic sort of process you go through. Go back into your daily charts, find out the absolute high for this run, bring it back down to the next high. You've got your resistance levels on the top side here at 91.10, and you've got your support level here at 88.90. All right. So that's just basically the Aussie dollar. So and once you've done this, you want to have a sort of journal next to you and sort of writing these levels down. So when you come back to the screens and say, we've got this data out in 45 minutes, you can come back and actually, without sort of drawing the trend lines again, know exactly what the levels are. Generally I actually post and put annotations on here to show you what they are. It's more for your benefit than for mine, because I actually know what the levels are. Okay, so that's the Aussie dollar. Now, obviously we know these currencies, correlate. So what we want to do is some insufficient data there on the old stochastics at the bottom. I'll just get rid of that. Now, the euro itself, it's been a bit of a dog's breakfast. We had a massive amount of sideways activity. This until just recently, last week, the trend line here was. I'll just go back out again, do the same sort of process. So take it sort of to a daily with sort of hopefully 1 year, sort of at least 1 year in your sort of view. You can sort of get a better idea of the overall what's happening in the currency. You can actually get a better chance to draw simply these trend lines. As you can see, sort of last week, we had you got your sort of major resistance level here at the top, support at the bottom. Then the currency itself sort of shot up from this level here using these. So that's the first touch. This will be your second, third touch here, and sort of coming up to your fourth touch. This is where this trend line sort of really comes into play. And this is the one that broke last week. Once it actually broke through there, we've had this sort of clean breakdown. Okay. Now what we're sort of really basically coming back to drawing is the new trend line itself. If I just take that off for a second, it's basically coming off the low to the next low. So it's two touches. It's not a very, well, it's had this sort of third touch here at the moment. It's not a very strong trend line. It's very steep. But at the same time, because there's nothing else around, it is something that traders will look at very closely. So just coming back over here, just to bring it back into perspective, you can start to sort of see here where it takes shape. Okay, you've got the very low here. You want to make sure this is right on the actual point. So just this situation here where you've got the one low just below it. You do not want to have the other lines that are coming through it. You're better off just taking it to the next bar where it actually sort of really came up from and drawing the trend line there. So now if I take this into the hourlies, we'll get a much better idea of the trend line itself and be able to draw the line. So there's a bit of margin for error here. This is why we're sort of constantly going back, checking the overall levels. Now this resistance line on the top side, that's way too steep and not useful for anything. So you get rid of that. Basically, we've got this major trend line at the top, which is miles away up here at 134.30 sort of 134.35. You've got it. We're sort of just right on a support level here. It's basically a very weak sort of level. The previous low here last week was 131 sort of 72. That's probably all that traders are looking at. There's nothing on the downside to sort of really hold this thing up. Okay, momentum. The idea of what you're trying to gauge here, if you're drawing on your journal, what are the levels? Well, in euro, there's a sort of a bit of a level here around 131. Well, the low, you could even just put down the low was 131.72 last week. There's a very weak support line coming in around here at sort of 80, but you don't give it any sort of credibility at all. The major part of looking at the euro chart is there's resistance miles away on the top side. The currency is in a downtrend or short-term downtrend. Momentum is down. Okay, so when you're looking at the other currencies, it's something you factor in. You know the Aussie dollar correlates with the euro. It's going down. It should put a bit of pressure on the Aussie. Then you come back and look at the Aussie dollar. This is where you sort of need to quantify, what state is the market in. And we just looked at the Aussie. You've got the situation where the Aussie is actually sort of tweaking higher. Okay, so it's like, well, that doesn't really sit well for the whole correlation factor. So you've got these two currency pairs which do move, usually in tandem or very close. Aussie going up, euro going down. It's a bit disconcerting that that is actually happening. And it happened about a week and a half ago where the Aussie and Kiwi were getting belted and euro and sterling were not moving at all. So these are some of the things we have to consider. Euro at the moment is on the sidelines somewhat. There hasn't been any sort of major releases. We've got the ECB meeting on Thursday, which may clear up some things. If anything, I always expect the euro to come off. It's extremely resilient, how it's got back up to 134, but that's the way things have been happening. So now, just coming across with the Aussie itself, I've got the yen here. I'll just have a quick look at that. Now, there's two things I've got on this yen chart. Primarily because the Asian session is open, I always sort of basically keep, especially with dollar yen, keep the Ichimoku clouds on my charts because I want to know exactly what the Japanese traders are looking at. Okay, if you're not looking at this stuff, then you're sort of asking for a bit of trouble. You can actually end up walking into some real nasty trades. At the same time, this is a daily chart. We just come back to a year. You're doing the same process, going into your daily charts, find out where the bigger trend lines are, and then coming back and drawing these trend lines on. If I just come back over here to the lows, I mean, this is the absolute low, so we'd be going off there. As you can see, that gets us in the middle of nowhere. If I come back to this point here, that's the sort of next major level. What you're trying to do is just draw all the trend lines that make sense, and then you can actually work out which one is going to be best for us. This one here looks like coming off these lowest points where the currency actually started going up. This is what it's like. This is the low. Everyone's going to draw that one. But this trend line here is in the middle of nowhere. The next point where it started coming up from is this point here. Once again, this is back at 92 or 92 and a half miles away when the currency is around 90, 99 and a bit. So then you've got the real starting point, which is this point here, coming up. You'd probably count that as a second touch, third, and we've had the sort of fourth touch here last week. And that's the sort of major trend line that we're focusing on. Okay, that's what the one line everyone's going to be drawing. On the top side, it's even easier. Okay, I can just correct something here. I just don't like to look at that. It's probably this point here is probably the second one. So what we've got is for all the traders offshore, they will all draw that resistance line. And this is why we've seen dollar yen have a really solid move higher. It's because the whole market was probably had stops here. Okay, now I want to zoom in here and just show you exactly what's going on. There's two different parts of the market actually operating, and it's very important you understand who's doing what. Okay, so we've got the major sort of level here on the hourly chart. So when you change the cloud over from the hourlies to the dailies, the Ichimoku cloud changes as well. So I've just got a situation here where, I mean, this is no surprise at all. For everyone that's sort of come through the workshop, so I'm just trying to sort of get this out. As you can see, we've got a key level here. You've got that major resistance level. As we saw, the whole globe is looking at that resistance level. There will be resistance levels, I mean, stop losses above this level. As you can see, the currency here stopped right on the point. Was sitting around there for a bit and then finally exploded and was taken off. All the stop losses were triggered there. That when you have one line at the top or the bottom, it actually is so clear and simple where the easiest trade is. You know, if we go back to the, let's turn this phone off. If you go back to the the key, when we had all those support levels, we had 3 different sort of support levels on the downside. You know, it may be a bit confusing as to seeing who's got what, but on the top side, there was only one resistance level, and it's very clear where all the orders are going to be. So that's the sort of highlight of actually getting this technical analysis correct, is actually being able to locate and isolate potential trading opportunities, and that's dollar-yen. So it's shot higher. That's going to have some implications. If I just switch over to the yen crosses, well, I've got CAD yen. This is actually sort of the cross markets, actually. Let me just come back to the yen crosses. Right, where are we? The key parts, I mean, the cross market stuff's more CAD, oil, and that sort of style of trades. So the recent activity on most of these crosses should be up. If I just get all these charts in the on the hourlies, these are all the sort of major yen crosses. It's very easy to once you get a good bit of software to put all these in. You can see basically on the same thing here. When dollar yen goes and the major currencies like say the Aussie, that's the Aussie yen there, all going up, it will impact all the yen crosses obviously quite dramatically. And you'll be able to sort of get some good momentum trades off this. Euro yen, it's been a bit more sort of sideways. It had the initial spike higher. That's because obviously euro sort of come off. When Aussie goes, and in this time zone, dollar yen is strong, Aussie yen is a great momentum trade. So that's one to sort of keep an eye on. Don't forget though, these crosses don't necessarily, you know, technically, they don't sort of come into a sort of technical play. You can draw trend lines, but the majority of the market isn't really looking at them. Okay, so even looking at the Aussie here, Aussie yen, it's got a very similar shape to the dollar yen had before it sort of broke higher. It's right there. Even with these crosses, I'll be more inclined to add the Ichimoku cloud on this. Now, so what you're doing, coming up into the daily range, you can see exactly what's going on. On the daily chart, it is breaking higher. You take this back into the hourly range again, and we'll get a much better perspective of what's actually happening here. And it's broken through that sort of resistance level again. So Aussie yen's broken higher, and the Aussie's sort of broken higher as well. So we're shaping the view for technically what's going on in the Aussie. At this stage, it's sort of more favouring a continued move higher, with the fact that dollar yen has gone higher means the Aussie yen's obviously going that way as well. Now, just coming across here to get our sterling charts up to scratch. The sterling itself has had another good sort of bit of a run last night on the back of some stronger manufacturing data. The same process goes for your technical analysis here again. Just get your daily charts up. I'll get rid of these bits of commentary there. You can sort of see here we've got a couple of levels. You know, drawing the sort of major level at the top. You can see this is the only major high. That gives us the sort of key level down on the resistance line. This level here that broke once again on Monday, I think it was, has actually broken back through. So it's going to be, well, once we get back onto the hourly charts, I'll move that across again. I can just get the there we are. Right. Okay, so then you've got the support level on the downside. Let me just get rid of this one. This is a good example of what you should be looking for. You've got one touch at the top, second touch here. It's coming up to the third touch. This line here will be one that everyone globally will be drawing. Okay, it's a very clear resistance level. No one's going to get confused with that. So what it does is, when it gets close to this line here, it creates very clear trading opportunities. What we have to just work out is whether we're actually buying on strong data, or if there's been a change in the general economic backdrop, or if there's no change in the backdrop, then potentially looking to get short. Okay. Then same on the actual downside. Because you got sort of 1, 2, 3, sort of 4 touches on this trend line, this is a great support trend line. If there is any weakness in the market as it approaches this line, well, it'll give us a great opportunity to get short as it goes through and clean up on the downside. At the same time, if it's back around these sort of support levels and we've got some strong data coming out, then you've got a chance to get long even ahead of this resistance line and look to go long sort of first on the data and second on the actual break of the trend lines. This is when trading gets really easy, when you've got two support and resistance trend line like this. It makes everything very simple, easy to make a decision. Okay, same with the Aussie at the moment. Unfortunately, with the Aussie, it's right in the middle of nowhere, so it's got potential to go either side. What we would ideally like is a almost like the sort of euro down here, where it's right on support. You get some weak data there coming out with the closeness to a support line, or even the strong data. You get good trading opportunities both sides of the market here on a release, primarily because of its proximity to these support and resistance lines. Okay, so that's the sort of major currency pairs. Let me just come back across here. The only other one that I would sort of really get stuck into on the actual other majors is the Kiwi. You always keep an eye on the bird. It's let me just get rid of this stuff. The Kiwi itself gives us some great trading opportunities. It does follow the Aussie somewhat, so sometimes if there's a resistance level on the Kiwi, it can be a very easy trade to get on the back of. So just coming back, same sort of process, take it back to a daily chart to sort of find your absolute levels. And we've got a high there. There's the next high. So the real high is up around 81, 80.75, 80.85. On the downside, we've got a very clear level here on the downside. Oh, looks like it's this line here. Boom. We've got some good levels there, but sort of once again, it's 150 points from sort of anywhere, and that sort of creates the trading opportunity, reduces the overall trading opportunity. It's more down to the economic data. So if I just come back into the hourlies, and you get this picture here. I'm always going back. Once I've gone from the hourly charts, always come back into the daily charts, come back into the hourly charts and redraw your trend lines. Now, if you're sort of looking for sort of even some shorter term sort of support and resistance levels, this is where you sort of start drawing from. All we've got is basically from the high to the actual current market. Now, that's not a resistance line at all. Okay, so you don't want to sort of be putting those in and sort of tricking yourself and thinking, well, I've got some good resistance here. This sort of line here where it's sort of banged up against one is your second touch, your third touch. This is where it started getting quite congested in the sort of barroom brawl area. And that's what's happening here. It's trying to work out whether it's going up or down. The Chinese data and the Aussie move over Monday has actually given enough sort of strength to push higher. But it's once again in the middle of nowhere. All right, so Kiwi, I'm not sort of too, it's not looking too perky. Just finally, just to come back to one of the key ones that sort of goes on here, we've got the CAD and oil, obviously do sort of correlate very highly. The other two the other major oil trade here is CAD yen. It's been behaving very odd. It's not really following what's going on in oil. The whole Syrian crisis is sort of blown out of perspective. There was a huge kerfuffle about the Suez Canal basically, and that was sort of the whole pressure on oil. Dollar CAD has actually been sort of caught up in a bit of a strong dollar move as opposed to the whole oil, US dollar safe haven more so than the oil price changing. So that's what we've got here. I've just got a sort of slight adjustment here in the CAD high. What we do have though is a very good, some good levels here on the CAD. This is where it sort of gets a little bit subjective. You can sort of be saying, well, it sort of went up from this level here, and we've got some good sort of trend lines. This is one that I would imagine most traders will have the second one here drawn. You can have sort of both and sort of be trying to factor in what's the full scale of this. When you've got two support lines like this, so one comes in at 105.26 and the other one at 105.07, I would always be going with the bottom line, primarily because that does start from the bottom. So that's what everyone will be looking at. At the top, we've got 1, 2, 3, 4 touches on the top side. We've got a good resistance line on the top side, which is also going to create some good trading opportunities. So when the currencies do start moving, you're trying to focus in on, is there any Canadian news that's going to push this thing up or down? At the same time, the US dollar news is actually obviously the other part of the equation here. So if the dollar starts moving, dollar Canada is another good trading opportunity, and I'd put a big circle around the CAD on your trade journal and say, well, if anything starts moving, dollar Canada as a currency, I'll be trading off the back of the technicals. Okay, so the Any questions there, guys? I mean, this is just a simple process. We'll be having these webinars on a weekly basis just so you can see exactly how we go through about drawing our technical charts. The idea is to sort of build your background knowledge on this so you can actually sort of feel a lot more comfortable and confident, drawing your own sort of trend lines. Okay, and it's just more of a process. The better, as you can see, I'm sort of whipping around the charts here. The more efficient you are with your trading software, the better you'll get at this, and the easier it will become. Okay. Any questions there, guys? What we're going to do is switch over to the retail sales webinar starting in about 10 minutes. This is the trading, the technicals with the traders. Any other questions? Send us an email, and we'll see you in the next webinar. All right, guys.